Welcome to Cambridge House Live. I'm Bridget Anderson, and I am joined by Chairman of Sprott USA, Rick Rule. Nice to see you again, Rick. Thanks for joining us.
Nice to be with you, Bridget.
You have said that we have not hit bottom yet, so when will we know?
Normally, bear markets like this end in a real capitulation spasm. 2 or 3 weeks ago, it looked like we were heading into it, but we only sort of had 2 or 3 days of it. Normally, this ends in a sort of a 2-week no-bid spasm. My suspicion is that we have to go through that. My suspicion is also that when we go through it, the market will bifurcate. The best 10 or 20% of the stocks will go sideways and then up. It's important to note, however, that the Toronto Stock Exchange Venture Exchange has an awful lot of companies that are probably non-viable. They will continue lower, so we'll feel like we're in a bear market for some period of time, where the best do well and the poor attempt to seek out their intrinsic value, which is of course zero.
And one of the ways that you were talking about this to investors is relating it to, or analogy, I guess, involving physical assets. So explain your thinking on that.
Sure. It's odd when people shop for financial assets that they want the prices to be more expensive. What we're in the middle of right now is the Toronto Stock Exchange Venture Exchange off 75%. If you were in Pacific Centre down the street and there was a store with physical merchandise, a nice blouse or a jacket, and there was a sale that said 75% off,
Seemed like a good opportunity.
Absolutely. So why is it that when we shop for physical assets, we like bargains, and when we shop for financial assets, we don't? If people think about financial assets more in the context of physical assets, they would become better investors.
Yet you have also said that investors shouldn't be using the market to get their information. And is that maybe some of the thinking that goes into this?
I think it is. I think that the easiest information to get is price information. But price information is only of use to you if you have some sense of value. It's the discrepancy between price and value where money is made. It's easy to get price information because you can see it in a stock quote. To understand what the company is worth, you have to do some work. Absolutely don't get information from the market. Understand that the market is a facility where you buy stuff that's selling for less than it's worth and you sell stuff that's selling for more than it's worth.
So then where should investors get their information then to properly evaluate their buying opportunities?
That depends on the investor. Certainly there are paid newsletters, some of which are good, some of which are not so good. Certainly there are full service brokers, certainly there are money managers. The best source of information for an investor is that investor themselves. But many investors don't want to take the time to do the research that they need to do to speculate correctly. Those investors need to find other sources of information, be they paid newsletters like Brent Cook's newsletters, be they buy-side or sell-side services like Sprott, or other services. You need to decide for yourself how much time you are willing to spend, and as a consequence of that, how much money you'll have to expend to get the money to segregate the wheat from the chaff.
And that's a good way to segue into talking about some of the junior mining companies. It has been a dismal time for many of them. Lots of those companies, they don't have the money to explore right now.
Right.
Their capital budgets have been eradicated. So what do you see overall happening in that sector?
Well, I think we need a cleansing. I mean, the truth is that we had a tremendous bull market from 2002 to 2010, punctuated, yes, by some declines, but a tremendous bull market. And the industry got overcapitalized. Too many congregations of butchers, bakers, and candlestick makers started mining companies, and that needs to get eradicated. The way that mining companies, junior mining companies, spend money needs to change. The Toronto Stock Exchange Venture Exchange, as an aggregate, has way too much general and administrative expense. So many of the companies that can't raise money and don't have any money need to go extinct. This happened in 1990, 1991, and 1992. And the consequence of that market cleansing, when the diamond discoveries were made in 1993, the up move, the violent up move that the market experienced as a consequence of that cleansing tells you something about what can happen as a consequence of this market.
And do you think that cleansing is happening enough right now?
No, there's still a lot more to go. I mean, the Toronto Stock Exchange Venture Exchange is still polluted by way too many companies that are non-viable. What's useful for investors, though, is that the market took up the bad companies with the good in 2009, 2010.
Yes.
Now it's taking down the good companies with the bad. And being able to segregate the good from the bad in a bear market is where the fortunes are made.
Yeah, and that certainly, as you say, takes some serious due diligence. I'm going to switch gears a little bit. I want to talk about precious metals. There's been a lot of focus on what's happening with gold. What is your take on it?
I think we're in a cyclical decline in a secular bull market. This is the 8th decline that we've had since the year 2000, the 3rd decline that we've had of 20% or more. I'm old enough to remember, you're not, but I'm old enough to remember the 1970s bull market. The gold price ran from $35 an ounce to $850 an ounce, an epic bull market. In the middle of it, in 1975, the gold price declined from $200 an ounce to $100 an ounce, a 50% decline. Investors that didn't have the psychological and financial strength to stay the trade missed a market from $100 at the end of the decline to $850 over 6 years. We are right now in a cyclical decline in a secular bull market. It's natural, it's healthy, and for the right investor, it's a sale.
And so is this the time to be buying gold?
I believe so. I believe so. The anti-gold, if you will, the thing it's measured against, is the U.S. currency, in particular the U.S. 10-year Treasury. Jim Grant famously calls the U.S. Treasury return-free risk. If you look at the credit risk profile of the U.S. government, I'm an American citizen, I get to do that, and you think of it in the context of the return that they pay you on the 10-year note, it's stupid. The alternative to owning gold, from my point of view, is unattractive, and the holding cost, the avoided opportunity cost, given that the rate they pay you on the 10-year Treasury is unattractive. For me, it's a no-brainer.
What about silver? Is that a good buying opportunity right now for investors?
Certainly poor man's gold. I own gold myself in preference to silver because I'm a fear buyer. I buy it for insurance. Silver guys are speculators. Personally, in the bullion space, my favorite are the PGMs, platinum and palladium, because I see the fundamentals in shape for them to move preferentially to either gold or silver.
And what do you think is fueling that move then on when it comes to platinum and palladium?
Two things. The most important player in the platinum and palladium business worldwide is South Africa. The South African industry does not earn its cost of capital. It isn't a sustainable business. And wages have to go up, and capital expenditures have to go up, and taxes have to go up, but they can't because the industry doesn't earn its cost of capital. Production is off by 19% in 6 years, and at today's platinum prices, the supply of platinum is inevitably going lower. Meanwhile, platinum and palladium have incredible utility. It costs $200 to equip a new car with a catalytic converter that gives us the air quality that we enjoy today. And pressure worldwide is for better air quality standards, not lower air quality standards. So platinum demand is increasing while platinum supply is decreasing at this price point. The price must go up, and the price can go up.
And do you think that North America could become a player in this area?
I don't.
Why is
not
that?
A prayer. 3 countries, South Africa, Zimbabwe, and Russia, produce 90% of the world's platinum and palladium. Can you make a little money producing platinum in North America? Yes. Does North America matter in global and platinum and palladium? No, not at all. Not a comma, not a period, not a question mark.
You said you're an American, you spent a lot of time in the States, so what's your take on the American economy right now?
I'm not cognizant of the idea of a jobless recovery. For me, what we have is a situation where the Fed has managed to convince people that liquidity is a substitute for solvency. We owe too much money. The economy is inefficient relative to some of our competitors. Bernanke is trying to convince you that if you have $2,000 in your pocket, it's okay that you owe $1 million.
It's a bit of a ticking time bomb, isn't it?
He's trying to confuse us between liquidity and solvency. Yes, we're liquid. The other thing that one needs to consider is this whole thing about quantitative easing. If you and I did it, it would be called counterfeiting. If it was such a good idea, they should allow me to do it for them. You know, Sprott would be happy to print dollar bills. But if we did it, we'd go to jail. It's important to understand that the only difference between quantitative easing and counterfeiting is who does it.
And where do you think this all leads to then?
I don't know. I don't know. Ultimately, George Soros has said that his fortune came from betting against commonly held precepts that were wrong. This is a commonly held precept that I believe is wrong, and I'm betting against it. And while I don't suspect that I'll end up rivaling Soros, I suspect it'll have a very, very, very happy ending for me and a somewhat less happy ending for people who go with the consensus.
Again, find those buying opportunities, right, Rick?
Absolutely.
Yeah. Rick, thanks very much. I really appreciate your time.
Bridget, always a pleasure.